Boom! We just entered for a tricky little long position on GJ. Unfortunately, I went into a little bit of drawdown, right? You can see price actually went down there, almost smashed our stop loss. Actually, it's not even almost, it's only halfway there, right? So we were only in a little bit of drawdown right here. And now everything is Gucci. Everything is Gucci. Look at price, just flying up like the way it's supposed to go, right? Going to the moon. Oh, look at that. Oh my god, man. Oh my god. Never ever doubt Brad Go. That's all I gotta say, bro. Like I said, that is home. So when I'm looking at this trade ideal here, what happened was that you can see, if you look at a higher time frame, we were actually bearish. And then what happened after we shifted bearish is that we got a market shift, which tells us that the pullback is over and right now price is potentially shifting bullish. So I wanted to look for longs, right? Because if I look at a 5-minute time frame as a scalper, which is like my medium time frame, or even my lower time frame, this is when I can see clear as day, internal order flow is bullish right now. And after this market shift happened, price pull back to where? Price pull back to this flip zone right here. Okay, this flip zone here, and guess what? There's available liquidity below these lows. So I was waiting very patiently for price to swap the liquidity before I even looked for my entry. So later on, price came all the way down here into our flip zone, swept the liquidity below these lows, and I still did not enter for the trade until price gave me a market shift right here, confirming to me that the internal structure is indeed shifting bullish, the pullback is over, and right now we going to the moon, we're rising, baby, right? We're rising, man. Feels good to be back, guys. Genuinely, from the bottom of my heart, feels good to be back. I miss this game, man. I don't think you guys understand. At this stage in my trading journey, it's not the amount of money that I can potentially make from this trade that excites me. It's seeing the trade ideal play out in the exact manner you envision it to play out that actually excites me. Like that shit lit something within me. Bro, look at that, man. It's like there's nothing more satisfying than seeing your trade ideal play out, right? Because you sit there on your charts, you know, do your preparation, do your analysis, do your research, do your chart markups, develop a trade bias, and like 8 out of 10 times it might not work out, but the 2 times that it actually work out, it pay off massively. Now we also got price giving us a break of structure to the upside, which once again just validating this market shift. Obviously, right now we can expect price to make a little pullback because price is meeting some supply that we have on this left-hand side right here. But the pullback is just going to be short-term, and then later on, price can potentially mitigate more demand right here, and then just continue pumping up, and we can expect price to hit my TP very, very soon. Right? Bear in mind that I'm trading GJ on the 1-minute time frame. This means that price is going to move hella fast, right? It's going to go up in just a matter of like a few minutes. Oh my god, man. They call me the GJ sniper for a reason, man. Yo, Brad, nobody calls you that. They call me the GJ sniper for a reason, man. Come on now. But yeah, man, like just look at how accurate market mechanics is. When price is pulling back, guess where price pull back to? Price pull back to the 5-minute flip zone that I've marked up right here, that swept liquidity, right? So this was the flip zone that caused this supply zone to fail. And just nice, if you go down to the 1-minute time frame and you zoom in and you draw the flip zone just by using the pivot candle just like this and you drag it all the way up here, you will see that price mitigate exactly the 50% of this flip zone before pushing to the upside. Come on now. Bro, market mechanics is cheat code, I'm telling you guys, man. Like, make sure you guys use it as much as possible to take advantage of the market before they patch that shit. Alright, hopefully they never patch that shit. But even if they do, guess what? It doesn't matter because market mechanics is based on how the market fundamentally move. Right, so as long as there's buyers and sellers in the market mechanics is going to work. I'm telling y'all, man, raw price action is all you need to succeed in this market. Raw price action is all you need to make your first $1 million in trading. Raw price action is all you need to get filthy rich. So yes, I fucking hate indicators. I absolutely despise indicators. And I genuinely believe with all my heart that most retail traders would be better off without them. Now, bear in mind that I started with indicators too. Back when I didn't know how to trade, I was using RSI, MACD, Bollinger Bands, exponential moving averages, all that shit. So when the freaking lines cross over, I would buy, and then when the thing crossed back over and hit this freaking line, dotted line, I would enter for a sell. And back then, I thought indicators were helping me. But now looking back in retrospect, I realized that it was just code. The only reason why I had to use indicators was because I did not understand how the market actually moved. I did not understand why price was moving. I did not understand liquidity, order flow, market structure, institution zones, psychological levels. I didn't understand any of those. So I had to rely on something else to tell me when to buy and when to sell. And once again, that's the trap with indicators. Just like signal groups, they make you feel like you know what you're doing. But in reality, you're just outsourcing your decision making to a lagging tool. You are literally outsourcing your hard-earned money to someone else. Not even someone else, something else. Instead of learning price action, liquidity, structure, timing, you expect a freaking red-blue colored line on the charts to save you. Now, if you actually sought my YouTube videos by the oldest, and just go and check out the videos that I've made a few years ago when I first started the trading gig, you will see there's a bunch of videos of me using the 8 and 14 exponential moving averages. And you might be wondering why I stopped using them. Because number one, obviously, is because I've learned how to trade raw price action, just purely analyzing the mechanics of the market. And number two, most importantly, is that I realized that all indicators lag like crazy. Even the 8 and 14 EMA. Because back then I was waiting for that shit to cross over, and by the time that thing crossed over, the market has already moved fundamentally. Because that's just how the market works. A lot of the move already happens first. Then the indicator gives you the signal. And by the time you actually enter into the trade, you're already way too late. You're basically reacting after price has already moved. And because of the fact that it's lagging, it's prone to giving you a lot of false signal as well. For example, when the crossover happens, you're supposed to enter for a buy. But by the time you actually enter for a buy, the market has already reversed heavily and start heading down. So now you're sitting over there with a bloody dick in your hand. Oh wait, but Brad, institutions, smart money, big banks, they use indicators and they make billions of dollars. Buddy, chill. You're not a billionaire hedge fund manager on Wall Street. You're not sitting there with insane data, big themes, execution, and size and software that costs thousands of dollars every single month. If that was you, you probably wouldn't be watching this shit right now. But no, you, my friend, is a retail trader. And since you're a freaking retail trader, you might as well learn how to play the game. Don't hate the player. Hate the game. So stop copying tools that you don't even understand. You'll be much better off just learning how to read raw price action. Learn how price move. Learn how liquidity works. Learn the timing of the market, because that's what's gonna give you the context you need to actually trade profitably in the market. Oh, come on now. We just got stopped out, guys. Come on now. All that talk for nothing, huh? I was like yapping like, hey, but this doesn't change the fact that freaking indicators suck, okay? Anyways, there we have it, guys. Today we lost about $81,000. Just part of the game, right? I'm not really fazed by it whatsoever since we literally made like 150k like yesterday. It's okay to give back half of it because I know for a fact that on the next trade, I'm gonna catch a big boy win. And when I do, that is gonna cover this loss right here. It still sucks that I became the freaking liquidity on this one, man. But like, it is what it is, right? Right? You live, you learn. Like I always say, man, you can't catch them all, bro. This is just the nature of the beast. I think the reason why this trade didn't work out is because I'm a fucking idiot. Come on, that's what you're thinking right now, right? Hey Brad, you're effing idiot for entering the trade. Why did you enter for this trade? Well, chill, man. I was following the plan, bro. I was following the plan, bro. Let's learn from this shit, okay? So in this particular case itself, you can see that the internal structure did shifted bullish, right? We did got a market shift, we did got an eyeballs. But what happened was that there was not enough buying pressure for price to come all the way up here. As a result, it just started shifting bearish the minute it mitigated this supply that we have on the left-hand side right here, because there's just not enough buying momentum, not enough buying pressure. So this market shift was not telling us that the entire trend was actually reversing, when in reality, it was just telling us that the fractal structure is shifting bullish in the short term to facilitate the pullback to the last internal lower high for price to continue going down even further. That's why we got stopped out, right? So the trade ideal, right, the entry was there, but the exit could have potentially been like right here, and that would have worked out. You can see, like, now looking back in retrospect, hindsight is always 2020. You can see price is literally just pulling back to this last lower high that we have right here for it to continue going down even further, right? So the order flow right here on the 5 minute is still bearish until this high get taken out right here. Honestly, this was 100% my mistake, right? Because I honestly should have waited for this high to get taken out for me to like even get bullish on this trade idea at all. But yeah, there we have it, guys. You're gonna take some time to go and journal this big boy trade right here. So yeah, that's pretty much it, man. Hope you guys enjoyed this little loss, because I sure as hell didn't. Anyways, I guess I'll see you when the market opens.